Hi, thanks for being here. This is Judy's Trading Notes. In this note, we're going to look at the market summary for January 21st, 2026. We are in a bit of a waiting game right now. The market is taking a breath before the heavy hitters Microsoft and Tesla report earnings next week. But in the meantime, we have a bit of geopolitical drama to discuss. You might have noticed gold hitting a record high, breaking past $4,800. This spike was driven by President Trump imposing tariffs on 8 EU nations due to the ongoing dispute over buying Greenland. This has triggered selling pressure in bond markets and mega-cap stocks. However, the good news is that Trump later released text messages indicating open communication channels, and the president of Finland mentioned that the crisis might ease this week. Therefore, the current interpretation is that this is more of a negotiation tactic. There is no need for the same level of panic seen last April regarding global, wide-ranging, and unknown tariffs. On the policy front, there's relief for the banking sector. The proposed 10% cap on credit card interest rates was not implemented by the January 20th deadline. Since there was no official order, credit card companies are maintaining the status quo, which removes a significant risk to bank profits. Also, Congress has agreed on a $1.2 trillion funding package, which should help us avoid a government shutdown at the end of the month. Let's touch on earnings. Netflix, $NFLX, kicked things off with a strong report. Revenue was up nearly 18%, but the real story is their ad revenue, which grew 2.5 times in 2025. They expect it to double again in 2026. It's a great start to the season. In the short term, there are currently no fundamental or liquidity risks in the market. Capital is expected to flow back toward earnings performance, though investors should remain cautious ahead of the first U.S. interest rate meeting of the year on January 28. Thanks for your time with us. We will flip to the next page for Judy's Trading Notes soon.